Hi, and welcome to this tutorial for the free accounting tool. This tool is designed to make your company's financial management a lot easier, whether you're brand new to accounting or already feel pretty comfortable with it. We'll explore the first few tabs of the file together and get your financial statements ready for year-end reporting. If your business is newly incorporated and you're preparing your very first set of financial statements and your first corporate tax return, this video isn't the right starting point. In that case, I recommend checking out our other tutorial, the one designed specifically for new business. But if your company has already produced financial statements and filed a tax return in the past, you're in the right place. This tutorial is tailored for existing businesses preparing their year-end financials. So, let's get started and let's head over to the Opening Balances tab and get started with your bookkeeping. This tab allows you to enter your company's opening balance sheet balances. Entering these balances is mandatory to keep your accounting accurate and up to date. Let's say you're using this file to prepare your financial statements for the year January 1st to December 31st, 2025. In that case, your opening balances should reflect your company's financial position as of December 31st, 2024. You can find these balances on your December 31st, 2024 balance sheet or directly from your 2024 T2 corporate tax return, specifically on Schedule 100. To access this schedule, sign in to CRA's My Business account using your secure credentials. If you're not sure how to download your schedules, check out our step-by-step article, How to Download Schedules from CRA's My Business account, including Schedule 100 and Schedule 125. It'll walk you through the entire process. Once you've retrieved your prior year's financial data, whether from your balance sheet or directly from Schedule 100, you're ready to enter your opening balances into the Excel file. Let's walk through a simple example together. Imagine your company's balance sheet as of December 31st, 2024 shows the following figures. Cash in bank, checking, $10,000. Cash in bank, savings, $3,000. Accounts receivable, $7,500. Inventory, $12,000. These are all assets, and you'll enter each amount in the corresponding row under the Assets section of the Opening Balance tab. Now let's look at the liabilities. Accounts payable for $1,000. Credit card, $1,200. Income corporate tax payable, $2,500. Loan payable shareholder, $8,000. Each of these amounts goes into the Liabilities section of the tab. Finally, under Equity, you'll enter Shares, $100. Retained Earnings, Previous Years, $19,700. Once you've finished entering the opening balances in the Excel file, it's important to verify that your company's balance sheet from the prior year matches exactly what appears in the Balance Sheet tab of the Excel file. Make sure the Verification tab at the bottom shows $0 in green. This confirms that everything is balanced and correctly entered. You'll be all set to move on to the next steps in preparing your financial statements. Let's dive into the Transactions tab. Let's go through a few examples together so you can see exactly how it works. Step 1 is simple. Add your company name. That name will automatically show up across all your financial statements, your trial balance, profit and loss, and balance sheet. Say you, as the shareholder, lend your business $5,000 to cover expenses. That money is recorded as a liability the company owes you back and will appear on a balance sheet. Another example, purchasing a vehicle for your business. Let's say your company buys a car for $25,000. In this case, the business pays $2,000 in cash and finances the remaining $23,000 through a loan. All right, let's see how this looks in your financial statements. Go to the Trial Balance tab, select any cell in the table, and click Pivot Table Refresh. Now your data from a Transactions tab will flow into your statements. You'll see the $25,000 vehicle recorded under Assets in the Vehicle account. Since the company made a $2,000 down payment, that amount will be deducted from the bank account. The remaining $23,000, which was financed, will appear under Liabilities in the Loan Payable account. Remember, the balance sheet always follows one simple rule. Assets equals liabilities plus equity. The tool checks this automatically. When you refresh the trial balance, the verification should show 0. You'll see verification columns in several tabs: transactions, trial balance, and balance sheet. They should match and show green. If not, your entries are unbalanced. Now, at this stage, your profit and loss is probably still empty. So let's add a couple of examples. First, sales. Suppose your business earns $10,000 in revenue and the customer paid the invoice. Next, an expense. Let's say you make a $500 purchase with a credit card. Important note: if your business is registered for sales taxes, it's essential to understand how to properly record both sales tax paid on purchases and sales tax collected on sales. For sales, you must track the sales tax collected from customers in the corresponding sales tax payable account, such as GST payable or QST payable. For purchases, you must record the sales tax paid in the appropriate input tax account. For example, GST input tax credits or QST input tax credits, depending on your business province. The rules for claiming input tax credits or refundable tax credits may vary depending on your business province. Always verify the maximum amounts allowed, as certain limits or restrictions may apply based on the type of expense, the nature of the asset, and its intended use. Properly separating and recording these amounts ensures your tax filings are accurate and helps avoid issues during audits or reviews. After entering these transactions, refresh your trial balance again. On the profit and loss, you'll now see revenue minus expenses equals net profit. Before we wrap up, a few best practices. Always use the correct date format. Pick account names from the drop-down menus, enter amounts in the right columns, and add descriptions for clarity, if needed. Once your transactions are in, head to the Dashboard tab for a quick overview of your company's financial health. And that's it for this part. In upcoming videos, we'll cover how to use the Sales Tax tab, how to do a bank reconciliation, and how to customize your chart accounts. We'll also explore the KPI tab to track performance, the Dashboard tab to build financial projections, and some tools to help with forecasting. You now have the foundation to get started with the free accounting tool. If you found this helpful, feel free to subscribe, leave a comment, or share this with other entrepreneurs who might benefit. Thanks for watching, and I'll see you in the next chapter.